Right now, at this exact second on Tuesday, November 18, 2025, Strive Inc., trading under the ticker ASST on the Nasdaq, is changing hands at $1.08. We are seeing an intraday push of approximately plus 3.85%. And while the chart might look like a standard microcap oscillation to the untrained eye, the order book is telling a completely different story. The stock opened at $1.02, dipped briefly to test the psychological liquidity at $1, and has since reclaimed the volume-weighted average price, VWAP, with authority. This isn't just noise. This is a structural shift in how the market is pricing a company that has fundamentally rewritten its DNA over the last 6 months. Most retail investors looking at ASST today still see asset entities, the legacy digital marketing firm that specialized in Discord communities and Gen Z engagement. That expectation that this is a low-float tech services penny stock is precisely why the opportunity gap here is so wide. The reality is that ASST has effectively ceased to be just a services company and has morphed into what the street is quietly calling baby MSTR. Following the merger with Strive Enterprises and the aggressive pivot into a Bitcoin treasury strategy, what you are trading today is not a marketing firm. It is a leveraged bet on institutional Bitcoin adoption, backed by a management team that is systematically turning this ticker into a Bitcoin accumulation vehicle. The market is still pricing it like a speculative tech play, but the balance sheet is beginning to look like a digital fortress. This tension between the legacy perception of the stock and its current reality as a treasury asset is where the alpha lies. Let's analyze the immediate price action we are seeing today. The bounce from the $1 level this morning was critical. In the world of microcap trading, $1 is not just a number, it is a psychological and structural barrier. If ASST had broken below $1 with significant volume, it would have triggered a cascade of stop losses and likely forced the stock into a compliance struggle with Nasdaq listing requirements. Instead, we saw what is known as a limit defense. Institutional bids were stacked at $1 and $1.01, absorbing the selling pressure from retail traders who were panicked by the early morning volatility. The moment that supply was exhausted, the stock ripped to $1.08 on relatively thin volume, indicating that the ask side of the order book is thin. This thin liquidity to the upside suggests that if we get a sustained volume catalyst, perhaps news on their latest Bitcoin acquisition or a 13F filing showing new institutional entry, the path of least resistance is aggressively higher, likely targeting the recent resistance levels around $1.15 and $1.20. However, we need to address the elephant in the room, the short interest. Microcaps that pivot into Bitcoin plays are historically favorite targets for short sellers, who view the strategy as a desperate attempt to pump equity value. Currently, ASST is dealing with a short interest that remains stubbornly high, with some data pointing to a crowded trade where short sellers are paying elevated borrow fees to keep their positions open. When you see a stock like ASST hold the $1 line despite this pressure, it signals a potential bear trap. If the borrow cost, the interest rate short sellers pay to lenders, continues to spike, we could see a forced covering event. The fails to deliver data on this stock has been spotty, which often hints that market makers are struggling to find shares to settle trades. This is a classic powder keg setup. If Bitcoin, the underlying asset backing this company's new thesis, makes a move, the shorts in ASST aren't just fighting the company, they are fighting the macro asset class, and that is a losing battle. Comment below with your average entry price on ASST. Are you holding from the pre-merger days, or did you buy in for the Strive Bitcoin thesis? Also, do you think the comparison to MicroStrategy is valid, or is the market getting ahead of itself? I want to hear your take in the comments. Now, let's peel back the layers on what Strive Inc. actually is today, because the confusion is palpable. Historically, the ticker ASST belonged to Asset Entities Inc., a company that built a business around managing Discord servers and providing social media marketing services. They were good at it, but it's a low-margin, high-churn business. The game changed completely with the entrance of Strive and the subsequent strategic overhaul. The company you are holding now is utilizing the public capital markets to raise cash via equity and preferred stock offerings, like the recent SATA preferred stock shares, to acquire Bitcoin. This is the Michael Saylor playbook executed at a microcap level. By issuing equity to buy a hard asset like Bitcoin, Strive aims to increase the Bitcoin per share metric over time. If they can issue shares at a premium to the value of the Bitcoin they acquire, the strategy is accretive. If they issue shares at a discount, it's dilutive. Right now, at $1.08, the market is trying to figure out if the management team is executing this accretion effectively. The recent news of the $160 million preferred stock offering is the linchpin of this thesis. By raising capital through preferred stock, ticker SATA, rather than just diluting the common stock ASST into oblivion, the company is attempting to protect the common shareholders while still building the war chest needed to buy BTC. This is financial engineering 101 for treasury companies, but it adds a layer of complexity. Investors need to watch the conversion terms of these preferred shares. If they convert to common stock aggressively, it could cap the upside for ASST in the short term due to the expanded share count. However, if the capital raised is deployed into BTC before a major crypto rally, the net asset value of the company could skyrocket, pulling the stock price up regardless of the dilution. We also have to discuss the Vivek Ramaswamy factor. As a co-founder associated with the Strive brand, his name carries weight. It brings eyes to the stock that would never otherwise look at a $1 microcap. In the current political and economic climate of late 2025, where anti-ESG and pro-sovereignty narratives are driving capital allocation, Strive's branding aligns perfectly with a specific segment of the investor class. This isn't just about financials, it's about sentiment. Stocks trade on stories, and ASST has one of the most potent stories in the small-cap market, a politically aligned, pro-Bitcoin, anti-establishment financial vehicle accessible for $1. That narrative value is intangible, but it provides a valuation floor because a dedicated base of retail investors buys the mission as much as the metric. Let's look deeper at the technicals on the daily time frame. ASST has been forming a base between 95 cents and $1.10 for weeks. In technical analysis, the longer the base, the higher the space. This consolidation period is healthy. It allows early speculators to exit and long-term believers to accumulate shares. The volume profile shows a massive shelf of support right at $1.04. This means a huge amount of shares changed hands at this price, creating a sticky zone where buyers are likely to step back in if the price drops. Conversely, we are seeing resistance at the 50-day moving average, which is currently trailing just above today's price. A daily close above $1.10 will likely flip that moving average from resistance to support, triggering algorithmic buying programs that scan for trend reversals. Watch the volume closely at 3:30 p.m. today. If we see a volume spike into the close, it suggests that smart money is positioning for an overnight gap up. On the short selling front, you must remain vigilant. Go to the NASDAQ site or your broker's terminal and check the days to cover ratio. Right now, it's hovering in a dangerous zone. If it drops too low, it means shorts can cover easily. But if it starts creeping up above 1.0 or 2.0 days, it means that in the event of a rally, there is not enough liquidity for everyone to exit the burning building at the same time. That is the recipe for a squeeze. Also, keep an eye on the borrow rate. If you see reports that the cost to borrow ASST shares has jumped to 20%, 30%, or higher, that is a flashing red light that the stock is hard to locate. In those scenarios, even a small piece of positive news can cause a vertical move as brokers force close short positions to manage risk. There is also a macro angle to consider here. We are in late 2025. The global liquidity cycle has been shifting. If central banks are easing rates, or if there is instability in fiat currencies, Bitcoin acts as a sponge for that liquidity. ASST, by proxy, acts as a leveraged sponge. The correlation coefficient between ASST and Bitcoin is approaching 0.8, meaning they move in near lockstep, but ASST moves more. This is beta. If Bitcoin goes up 1%, ASST might go up 3%. but the sword cuts both ways. If Bitcoin drops 1%, ASST could drop 3 to 5%. This volatility is the price of admission. You are not buying a treasury bond here. You are buying a call option on the future of digital finance. Another aspect often overlooked is the legacy business. While the Bitcoin pivot is the headline, the asset entities side of the house, the Discord community management, actually provides a unique synergy. Crypto and Bitcoin run on community. Discord is the town square of Web3. By owning the infrastructure that manages these communities, Strive has a direct line to the retail army that supports its stock. They don't need to pay for expensive PR campaigns. They own the servers where the traders hang out. This vertical integration of community and capital is a subtle but powerful advantage that traditional asset managers lack. Quick question for the audience. Do you think the Section 351 tax-free exchange, where investors can swap their